Hey everybody, Steve Ankerstar here, and welcome to the Ankerstar Wealth Morning Show. I'll be at the afternoon today, but we are back. We've been off air for a couple months now. Been focusing internally on, we had a new hire and we have a whole bunch of things we've changed internally to better serve you, the customer. But I do want to get back in front of you on a near daily basis and kind of talk to you about what's on my mind, because that may help answer those questions that you have floating around out there that, maybe you're polite enough not to ask, thinking you're bothering us. But I know, especially during election year, we need a lot of communication, need a lot of questions to come in, and a lot of answers flowing back out to you. So we're going to talk about three things today. We're going to talk, first of all, we got some new portfolios that our new chief investment officer has brought to market. And we'll talk about what those can do for folks. They're in our new brochure, which we'll also get out to everybody. And we're going to talk about that first, and then we're going to talk about the Fed decision from yesterday and what Chairman Powell said, how that affected the market, and what do we think that going forward. And then we're going to just do an overall review of January of 2024. There is a saying out there that as goes January, so goes the year. So that would forecast, obviously, that we're having an up year in 2024. But then again, there's that election thing. So we'll talk through all of that here in a minute. But before we get started, remember this is a financial education presentation. You have to do your own due diligence before acting on anything you hear in this presentation. More information is available at ankerstarwealth.com, which is also new if you haven't checked it out in a while. And with that, let's go ahead and get started. I want to share out to you first our new model portfolios that we have. So you should be seeing it on the screen now. So part of this time where I haven't been doing the morning show, we've been working literally all day, every day on getting new technology in place to get information out into your fingertips. Part of that is a new risk system, new company that we've signed on with. So no more Riskalyze. We're now with Stratify. Same thing, slightly different language, but to you, it's helping you quantitatively figure out your appetite for risk. There's appetite and capacity, and that's something you sit down with your advisor, but it helps you capture it. And if you want to change it, it can change very quickly versus our old system. You had to do this big contract amendment, and we're getting into where we can be a little more nimble, especially going into an election year when you do want to stay risk on so you don't miss out on anything. But there is going to be a time to go, not risk off, if you will, but certainly lower the risk going into the election. And again, you'll work hand in hand with your advisor on these particular scores. The words at the top are largely the same, but the numbers, again, it's on a 10-0 scale instead of 100 that we used to have before. But when you look at the right side, that 9.0 highly aggressive plus ego, one thing that our new chief investment officer has brought to us are some what he calls it exponential growth opportunities. So what I have focused and built a business on was staying kind of large cap, mostly tech. And I know that I've been myopically focused there because of there's only so much one person can look at, right? So I kind of have the major market captured, and that's what we've all benefited from that. If you've been with Ankerstar Wealth at all, for especially been with us the whole time, right? But one thing I've not had the time and or expertise is to go out and look for and what's like the next gen tech that's coming out there, or healthcare, or whatever the field may be, but what's coming, right? And there's large gains to be made when you take your eyes off what's already established and start to look for what will someday replace that. So again, Mike has expertise in looking at stuff like this. He's invested in these in the past and they've paid off. So again, we're offering those as part of our higher aggressive models out there. Again, if you're at a moderate or even just a regular aggressive, you won't necessarily have these, but it's something to talk to your advisor about. But we also have what's new is specialized portfolios. So there's three of them down there. The first one is the Ankerstar Wealth Income Generation. When you think of portfolio design, what you should think of as a portfolio manager like myself is what problem am I trying to solve? Am I trying to make the person the most money with unlimited aggressiveness, or do they want to say in retirement you have X number of dollars there and you want to generate income to live off of, and you're taking that as an income replacement into your checking account each month? Well, that's what these Ankerstar Wealth Income Generation specific portfolios are designed to do. We have a 4%, 5%, and 6%. And you're like, well, why wouldn't everybody want 6%? And it's like, well, there's a little more risk with the 6%, right? 4 is super easy right now, especially with CDs playing 5. So right now, if you were to say, I want a 4% portfolio, it's like, I can get you 5 for almost risk free. So let's do that. But if and when the Fed drops rates, that'll change, right? So that's why we kind of set it up there for a more normal year over year process than what we have necessarily right now with CDs. If you have money in the bank, bring it in, to your account. We got the best CDs out there because Schwab offers these amazing opportunities. You can talk to your advisor about that, but certainly over 5% right now. That won't last forever. That's our Ankerstar Wealth specific portfolios that are designed specifically for that. The middle bottom one there is if you want portfolios of just ego stocks. So maybe your net worth is here, but you're like, I want to give Ankerstar Wealth a try. And here's a smaller account, which is in relation, whatever that is to you. But you specifically want to try to grow that, or you open up, say, a UTMA for one of your kids that can afford to be super risky because they have, this 30, 40-year time horizon. That would be where an ego portfolio would be appropriate, right? We are going to have one with 5 stocks and 10 stocks. We already have them. But if you're interested, again, that's when talk to your advisor about like, I want to hear more about that. And then off to the right are just small accounts that say you have, a normal risk. You're not often the super speculative, if you will, with the ego stocks, but you just have a smaller account. Well, there's certain holdings that can't be held in a smaller account, right? If you open a $500 Roth IRA, you can't have service now because it's a $600 stock. So it focuses, the small account portfolios focus on the smaller share prices. So you can get more into that portfolio. So you can still have some diversity, portfolio perfection, but you still have the best names that are out there. So again, we have a new brochure. It's going out to print right now. I believe tomorrow I'll be able to do a full release on everything that's in the brochure and walk you through that, as well as email it out to everybody. So it'll hopefully not only helpful for you to understand, but if you do want to help the cause and, market this to one of your friends and say, not only just like, hey, you need to call Steve, which is normally the referral, which is a little light on, or check out the website, right? But this is a focused portfolio or brochure to specifically describe what we do, how we do it, and why we think we can do it better and cheaper than the other folks, and why you should give us a shot. Okay, let's transition off to our next topic, which is the Federal Reserve meeting. These happen every 6 weeks. They have the couple of clicks to get over to it here. Not that screen, this one. They have these every 6 weeks. They start on Tuesday, on Wednesday at 2 p.m. Eastern is when they have the announcement. A couple of paragraphs comes out, boom, hits it instantly. Algorithms go crazy and react to it. And then you have Chairman Powell, or whoever the chairman is, of the Fed over the years, talks and answers questions for like an hour and kind of peels back everything they talked about in their meeting. So they're very informative. I know you have to be a little bit of a, interest rate junkie and to kind of pay attention to this. But if you're in the investing world as a professional, you have to know not only what they're doing, but also kind of read the tea leaves, right? In 2023, I'm going to take a complete victory lap right here and say, not everybody, almost everybody out there was calling for a recession. And I was saying there's not going to be one, or if there's going to be one, it's going to be pretty small. That the strength of the labor market was going to win out over the historic raise of interest rates. And again, minor opinion, but I was right. And that kept you fully invested up to your risk tolerance. But certainly if you're fully risk on, we were aggressive that whole year. And it was a huge year. 23% on just the vanilla SPY investment. So we had portfolios up into 30, 40, and some of them that if you went Bitcoin only, kind of when that craze jumped out right at the end, are up 100% on the year. So there's a lot, and that's not specifics, but that's in some accounts within the book, depending on the risk level. But certainly you would have missed all of that if you would have believed the negativity of the mainstream press, right? That's out there and was saying it's a recession and doom and gloom, blah, blah, blah. You're hearing the same stuff this year. We'll talk about the forecast here in a second. But his lines are specific. Don't really think there's going to be a rate cut in March, which was largely called for, and maybe towards the beginning of the year. It's data dependent, so he's not saying a whole lot. He's not going to go out on a limb here, but that remains to be seen, right? We shall see what happens throughout the year. If the market's good or the economy's good, I do not personally see a reason to cut rates preemptively. I don't. I think we should stay higher for the whole year if we can, unless something starts to break, because that really can kind of get us more towards a more normal type of growth. But whenever you see, the first sign of pain, people want to bring the rates to zero and juice the economy, which works very well. And then we're off to the races again. We'll make a lot of money if that happens, but we shall see. All right, so let's switch now to our third and final topic. What happened in January and what's going to happen the rest of the year? Again, no crystal ball. Run away from anybody that says they have one, but certainly we owe you our opinion. So here's 2023. You are looking at a 1-year chart. This is the SPY. So this is the S&P 500 that we're looking at. And 2023 started, way over here, and Wasn't a straight line up for sure. Did have those selling months in here, but certainly end of the year was kind of a straight line up to here. When you scroll down to right here, year to date change 2.9%, but that factors in 1.31% today. Remember, we had the sell off yesterday, snap back today significantly. So subtract those two numbers, two risk doing math in public, 29113, so 161. A percent and a half up in January. So it was really kind of a smooth sailing month in January. A lot of positivity, not a lot of inflation negativity. Employment's good. Really, everything's looking pretty good to continue this on into the year. There's a phrase in the bit industry that says, new highs get more new highs. So we did bounce off new highs. Whenever you're hitting new highs, you tend to hit like several in a row, right? So that's what I fully expect to kind of have happen until this insanity of the election creeps in. So we're staying long and strong for right now. Not making any major moves until we see some of the volatility towards the end of the year take place. So with that, there were a lot of big earnings out tonight. Some were good, some were bad. We're going to talk about that tomorrow. But overall, we're back for the Ankerstar Wealth Morning Show. We do hope to have a couple other folks present. I think Michael will come on camera, sometime in the next week or so, or 2 weeks, and talked about those exponential growth opportunities that we have for you and some of the thinking that he has as the new CIO. With that, I will let you go, and we will see you guys tomorrow morning. Bye.